Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to the final Bull versus Bear webinar for 2022 on TGI, Friday, the 23rd of December. So welcome everyone. Steve Miley here on the Call for Trade Day. Yeah, our last webinar of the year. Just to point out that we are starting early, so I'm guessing maybe we don't have as many on live today from the US, as it is an early start. It's currently 5:30 in Chicago and Central Time, New York Eastern Time 6:30 a.m. So it's an early start. So apologies for bumping this an hour earlier. If you didn't see that I bumped it an hour early and you're picking it up on the recording, my apologies, but I did post it out yesterday and also putting it out on the webinar yesterday. So probably going to have very few listeners on from the US, from stateside. Hopefully got some of our Asian and European traders on this morning. And so last webinar of the year. A big thank you to everyone from myself and James and the Trade Day team for coming on the webinars, for being part of the Trade Day experience. We hope and trust that you enjoy everything you're getting, the extra support that we try to give here at Trade Day. Good luck going into 2023 with your trading. There will be some changes to Trade Day going into 2023. Not literally from the very beginning, but very early on. Certainly, we're hoping in January, probably early on-ish in January. So please do keep them peeled. Keep an eye out for the updates to the site. Okay. As we've pointed out, and as I'm implying now, this is the last webinar. Webinars to resume on January the 3rd. It's in the activity feed. I put it on the daily digest, the scrolling news we have going on. It's all over the site. So we're back with you on January the 3rd. Okay, so see you then. And also, there's going to be no of the daily research reports that I post. You had the last one yesterday for today. They will not resume. I will post the next one probably on January the 2nd for January the 3rd. Okay, so that's it really on that front. Let's go through our usual run through in it today. I'm going to keep it brief. It's the last one of the year. There's not a huge amount to talk about. We actually have half days, so basically we already closed in Asia. Pretty much got half days in New Zealand, Australia, and so and the UK is actually a half day today as well. So the UK are going to be closed shortly. Some of the other European exchanges, I think, are closed earlier today as well. So things getting very quiet globally. People are on holidays already. And if we look at what we've got coming up from the US, though, we do have some significant. We have the PCE data. So remember, PCE, personal consumption expenditure. The Fed tell us one of their preferred measures of inflation. So it's important. It doesn't tend to massively move markets, even though the Fed tell us it is their preferred measure. But nevertheless, we certainly need to be keeping an eye on that. We get that at 8:30 Eastern. So it's still another, and usually I'll be saying 1 hour's time, but that's still another 2 hours time. So 2 hours from now, we get the PCE data. So we're certainly watching out for that. And then at 10 o'clock Eastern, we get Michigan consumers expectations and sentiment as well. Sometimes that can move markets. So watching that for that as well going into today. 5 things to start your day. I didn't see a US version of this, so this is the European version. There's nothing really massive in here for us. So SBF released on BAO, Sam Bankman-Fried, on a $250 million BAO package. Gosh. China, COVID infections keeping people home. Guggenheim Partners Chief Investment Officer passed away, sadly. UK grid faces cost for power stations. I mean, none of this is really, and European equities had edged higher when this was released. So nothing really too much of note in there. NASDAQ futures steady with stocks ahead of data. So I'm talking about the PCE data there. It's been a very head for worst December since dot-com bubble burst. So certainly a negative in the Nasdaq. Tesla really not helping things in here as well. I'll talk a little bit about that in a second. And what else do we have in here? Yeah, futures in here. Why is that not updated? Futures steady ahead of November inflation data. So again, pointing to the PCE data in here. Futures steady overnight, having had a significant sell-off and then a significant rebound yesterday. So it's a bit of a strange day. Musk says again, Tesla share sales will stop, but stock continuing to go lower. So Tesla getting damaged. And oil is up significantly overnight in here. Russia may cut output. They said they may reduce daily production by 700,000 barrels. And it's pushed higher, up by more than 6% this week, WTI, and higher overnight in here on that potential cut in production from Russia in response to the cap that's been put in place. And a few articles on that. Russia said it may cut output up to 7% over the price cap. And then again, another article, oil rises 2% on Russian supply worries and the US storm impact. So you've got the big storm hitting, this storm of the century, storm of a generation. They're talking about it. I don't know if that's hitting you guys yet in the US. Stay safe for all that, everyone. For our US, I don't think we're going to have many US compatriots or traders on today, given that we're an hour earlier on the start. But if you're listening on the catch up on the recording, do stay safe during the storm that you have either hitting now or about to come. We've had a little focus earlier this week on the fact that we had a big plunge in Japanese government bond yields, a rally in the yen, a surge in bond yields, a plunge in JGB prices, and also putting global bond markets lower with that, particularly European bond markets, but also US bond markets lower, with the Japan relaxing its targeting of the yield curve levels. And that has been now reinforced by the fact that inflation hitting a 40-year high. So overnight in here. So all eyes on further policy going forward. Where are we right now? Well, European stocks are slightly higher in here, 0.2 on the FTSE, 0.4 on the German DAX. Remember the FTSE closing early today in less than an hour. And then the CAC is pretty much unchanged on the session. US stocks in here, even though they were lower yesterday, did rebound off the lows, a solid rebound. And following that up with the Nasdaq nearly 0.5% up today, 0.4 on the S&P and the Dow going into this morning. So let's take a look at a few of the charts in here. So even though I stayed negative after the rebound here, we did make a new low on the S&P and on the Nasdaq. There's the S&P on the daily. There's the Nasdaq on the day. A big new low on the Nasdaq, almost getting down to the. Remember, this is the bear market lows. Okay, from back here from November and from October. So the Nasdaq not too far away from those, but then we did get an intraday rebound, better and not as damaging on the S&P, just below the low from early this week, and then back higher. Not enough to actually neutralize bearish tendencies, but getting there actually. So as we go into today, if I look on the 15-minute chart in here, so there's the sell-off we had yesterday, and there's the rebound, and the market kind of up and flirting with some resistance points. We actually took out an important resistance points around here, which I had in my daily. So if you look at the daily report, we had resistance here. We were still below that, around 38, 57, 58, I think I flagged it at. So we actually managed to get above there overnight and then back above there more recently. So we are seeing a more positive tone. We've taken out, so yesterday we had a couple of stutters down. So we had 1, 2, 3, arguably 4 moves lower. Yesterday came in like 4 waves, and we're above the top of the both the 4th wave and the 3rd wave. So real upside risk shifting to an upside bias, I would say now, given that the turnaround we set, so in here it's not a hammer pattern by any stretch of the imagination, but nevertheless it did get a decent rebound in the afternoon session yesterday, and if we can get we've already gotten above, say, this resistance point here, which I flagged yesterday in the report from last night. We got just above there overnight and then more significantly above there. So this is looking more positive. If we go back below the low here, back down through 38.45, looks more negative. But I can easily see us having more of a positive day into year end. But again, it's going to be very dependent on data. So we could be aiming back up towards 3,900, okay, on the S&P. And a similar story, Nasdaq was very damaged, and we did get a strong intraday rebound. And if you go into the 15-minute chart in here, So you can see we haven't quite gotten above. So we got down this last wave down, but you see the little failure points here. So the market went down, rebounded, held, and went lower. So these points in here, 11, 1, 20, 25, needs to get above there. So, and you can see we just faltered there. So through 11, 1, 21, 25 would be more bullish for me on NASDAQ. Should we undercut the recent lows in here? You've got lows at 11,026 and just above, and 11,025. So below 11.25, 11,025 looks more negative, I would say. So you've got to come into it looking a little bit negative, but there is a real risk of a base forming in here above the S&P and NASDAQ. So, but again, very much data dependent. Let's start off with oil, seeing as that's been moving. Another decent update today. We had a surge yesterday, another pushback higher in here this morning. Still looking bullish here on oil. And go to the 15-minute chart. We've had a little bit of a dip, but then a solid rebound in here. Again, for me, it's all about upside risk. Up through the overnight high and maybe back to yesterday's high. Targets above 79.34. And then just below, where are we? 79.90, yeah, just below 80 we failed yesterday. Could easily see us above 80 today. Let's take a look at gold. Daily chart. Chop Fest came back from the resistance point yesterday. Just caught. I mean, I've been saying no view in here. It's kind of captured between 78, 85, 80 on the downside and keeps topping out 1830 to 1835 topside. And we're right in the middle of that range. No view. Absolutely no view, and echoed on the 15-minute chart in here. Sideways City, no view in there whatsoever. Chop Fest. And a quick nod to the bond market, 30-year. So we had the big sell-off, partly driven by JGBs in here, and then since then, dead cat bounce. So this looks more negative in here, and we're back down close to the recent lows. Back down through the low here. 127.19 would certainly look more negative. I'm just going to throw in here. Z in. Are we Z in on the 10-year note? Assuming we are, right? It's a similar story. Actually, 10-year note more negative. Already down through the low. Yeah, so looking very negative there on the 10-year note. So bond market's looking more negative in here, certainly going into today. And equities potentially forming a base. All right, I'm going to wrap it up there. Probably a lot of you guys not on from the US. Hopefully you're catching in on the recording. Remember, last webinar this is for the year. We will return on January the 3rd. Want to wish you all happy Christmas, Merry Christmas, happy holidays. And here's to a great 2023 with Trade Day. Take care, everyone. Have a good one. Bye.